Hey everyone, hope you're having an absolutely incredible trading week thus far. Now heading into Thursday Open, markets have been pretty decent and interesting this week, both on the lower time frame when we're trading London session, as well as progressing into the New York session as well. However, they've equally been as good for some of our swing traders, including myself. Unfortunately, due to the ongoing migration and integration from our existing platform to our new platform, I am spending a lot of time behind the scenes with the back end, really trying to make sure that it's all efficiently operating and the transition and the transitional phase has gone and is going as smoothly as possible. Unfortunately, there have been some kinks that were unforeseen, or at least the advice that we were given was incorrect. Had that have been the case, or if the information was provided to us before we actually concluded the move, or at least executed the move, we wouldn't be here where we are right now, nor would we have launched it as quickly as we did. Now, we were working on the launch of the new platform for at least 2 months. As you can see, the back-end infrastructure, the whole front-end infrastructure is absolutely incredible as well. Obviously from a website standpoint, a graphical content standpoint, and the organization within the actual content as well. The 4 of us worked extremely hard to make that happen. So we appreciate the feedback that we're receiving so far, and we really do hope that it helps you to take your trading to a new level, whilst really giving you the ability to understand and track your progression on a daily, weekly, and a video by video basis. Now, the reason we wanted to not only refine and provide a more streamlined and efficient platform for your viewing purposes was primarily because as we grow as a community, we wanted to make sure that we can provide better content, not only in phase 1, but for phase 2 as well. Now, there are big things on the cards that we're all launching. As you can see, we've got 2 incredible guys on the team who are now really moving forward and helping us to move forward with phase 2, which I'd like to welcome aboard formally, Albie and Sketchy. So as they're already team members, but as you can see, going forward, they're going to be putting a lot more work into the community, providing us and yourselves with a lot more content, which hasn't gone unnoticed, the amount of hard work they've actually put in. Brad and myself truly value these 2, hence why they're an asset to the Phantom community, and hence why I do genuinely believe they are a part of why we are so successful as a community. Brad and I always set out on a mission to create not necessarily the largest trading community, but the most hard-hitting trading community that has an impact on your individual trading journey and your trading career. We've been launched now, just over 6-7 months, and we've seen some incredible progression by you, and it's only just the beginning. We also wanted to make sure that with our back end, that realistically, we're not going to be hindered as a community, as individuals, by the small minority that try to bring you down. We want to build in silence, and we want to give it to all of you to ensure that you take utmost value from everything we do. But without further ado, let's dive into the charts for this week, and let's see what's on the cards for Thursday and Friday's trading session, and maybe heading into Q2, what could be potentially preparing and developing itself. But let's quickly say, and I must, this is the final day of Q1. Please make sure that you're ready for Q2. Let's all level up together. Let's smash any existing beliefs and limiting beliefs that we have, and let's really go hard for Q2, because I genuinely believe in every single one of you. It doesn't matter whether you're male, female, it doesn't matter whether you're in the southern hemisphere or the northern hemisphere of this beautiful world and beautiful blue marble that we sit on. You can literally achieve anything you want in life, and don't let anyone else tell you differently. Don't let anyone else hold you back. Put the work in and the results will come. But let's dive into the charts and let's see what the markets are cooking up. kind of touching upon a few areas that we had a look at last week. Now, I'll be completely honest, I've not actually had the chance or ability to truly trade this last week, let alone the week before, unfortunately, since Wednesday of the migration. Now, I'm a little bit out of touch with the markets, primarily because I missed a few trades. One was a cable play that I was looking at, and the second is the Euro Sterling trade that we missed earlier in the week as well. But nevertheless, we want to make sure that we continue to deliver the content for you all to continuously progress within your own trading journey. Just because I miss setups doesn't necessarily mean you should have to too. Now, Euro Sterling on the weekly time frame, you can see that overall we're stuck in this larger range. We're contained within the price of this swing high to the left and this swing low down here as well. Now, price is failing, as you can tell, to make any higher highs or break these lows to thus create a new lower low. Now, whilst price is contained within here, we have to look at what is logical. What do we potentially believe the market is now going to do in order to create us either a swing trading opportunity or at least an intraday play, if at all possible. Now, again, just as a reminder, Euro Sterling, you're playing two risk-off currencies, two risk currencies against one another. So Euro and GBP. Now, they're not the most, should we say, exciting of pairs to trade. However, they do give us the goods on a consistent basis. And that's why I always tend to trade Euro Sterling within my overall portfolio and my basket. Now, just a very quick one before I go into the analysis of Euro Sterling. I do get a lot of questions with regards to the pairs that I trade, and I do genuinely see, or generally see, quite a lot of this type of question popping up within the FAQ, the questions, the general channel, and it varies. You know, in terms of the pairs that I focus on or the team focus on, it depends on what style of trading we're looking at. Now, if we're trading London or New York session specifically and exclusively, we tend to look at maybe Fiber, which is Euro USD, or we'll look at a GBP based currency cross denomination, so Cable or Guppy, Sterling Yen. So they're the three that we'll focus on primarily around London open session or New York open session. However, as a swing trader, I do tend to, of course, have those in my armory as well, but I'll also look at Aussie dollar, Euro yen, a dollar cross like dollar CAD or dollar Swiss, Aussie dollar and Kiwi dollar as well. And relatively speaking, I tend to know no bounds with regards to a particular cross. I may even trade different indices, be it the DAX, the S&P, the Dow, the FTSE, or I may even look at commodities. And I am quite keen to even note that I do trade digital, so cryptocurrencies, on this edge and strategy as well. Not as much. My main focus will always be G10s on the basis that the majority of the market is going to give me that liquidity that I require. We don't necessarily need to focus on too many pairs. However, you will find that the edge, the ideology around supply and demand formulated with SMC concepts for all of the content that we provide can be applied across different asset classes. So it truly is a multi-asset class strategy, and it allows you to also potentially diversify your approach within the financial markets as well. You know, we've got position traders on our books, swing traders on our books, day traders, scalpers. So it's entirely up to you how you create and tailor all of the information that you're receiving from Phantom and apply it to the charts yourself. Ultimately, if you're looking for higher ROI, then you're probably and more realistically going to be looking at swing trading from the 4 hour all the way down to your kind of intraday scalping edge around the London session or New York Open. And again, it's all relative to an individual circumstance. But without further ado, let's go back to the logic of the markets and see where realistically Euro Sterling is potentially heading in the next week or two. So first of all, if we look at current market price action, we can see that we swept and took out the liquidity from these equal highs here that were originally protected and could be seen as causes for higher prices. However, after we swept all of that liquidity in there, we created that huge rejection wick, pushed to the downside, but did fail to break this structural low, then corrected back in to mitigate the liquidity that was left and remained inside this wick. We then started to push back down again, failing to break that swing low on the weekly time frame, which then did print equal lows and a cause for lower prices. Now, you can see that the market has then continued to the downside, and the most logical area for us to target right now is this region here. There's a couple of interesting things going on. We have the higher time frame AOI and demand zone sitting down here, which starts up at around that spot 84.21 handle, with the low of that demand area being around spot 82 3/4. What's also taken into consideration as well is to the left, and we're going to start highlighting this a lot more as we progress within our commentaries, our content, and our general weekly content, as well as the weekly commentaries, and as we progress with Zooms and weekly, bi-weekly information on videos and live sessions, we'll touch upon these in greater detail as well. We also have a higher time frame, weekly time frame range that potentially kind of provides us with an additional confluence around the supply and demand fundamentals, or the fundamentals of supply and demand, should I say. If we were to even zoom out and kind of just look at the bigger picture, we also do have almost this ascending trend line that kind of plays in line with the theory that markets looking to seek liquidity from in and around this area. Now, for me, on the lower time frame, I do expect a reaction from around this area, anywhere between the EQ of this range up around spot 84.47, all the way down into kind of this more refined area, which is the higher time frame AOI, as you can see on this swing point. We do have these equal lows, or these protected lows, that need to potentially be swept in order to create the weakness and cause for lower prices. But just be kind of mindful that if we just focus the fact this is the weekly time frame, and then we zoom out, we're in the premium of this range. So realistically, you don't necessarily want to be buying in and around this area. You'd ideally want to be looking for shorts from this zones, or these zones. So it kind of brings me to the conclusion that there is going to be some form of reaction here. However, I do expect, from a logical standpoint, price to continue to weaken, maybe coming down all the way down to this huge range that we have that starts up around that spot 74.81 handle, with the low of that range being the spot 69.41 spot 2. So if we refine that, then we do also have, of course, that last buy before the sell candle, which we can refine to the first buy candle. Sorry, the last sell before the buy candle, which we can refine to the buy candle here, because the wick just briefly breaches that low of that last sell position. Overall, it is an inside bar as well, so you could take that into consideration as well. So some nice confluences that potentially could mean that price has to seek out that liquidity lower down. Now again, if we are to focus on premium and discount, as price gets below the EQ of this larger weekly kind of containment of price, this is realistically where we would like to be looking for long positions, because this is coming into the extremity of that move. Now, if we kind of come all the way down to the left as well, you can see that we do potentially have an even more extreme potential, which kind of breaks down all the way down to that kind of spot 66.10 handle. So let's just say 6,600, which is the big round number. So for me, I am going to be looking for longs initially as price enters into this AOI, this nice demand zone. But realistically, I'm going to not necessarily be trying to swing for the highs on this. I'll be targeting liquidity sitting up and around that kind of 8,900 level, with the cause for lower prices and the mindset that price realistically is just going to be swinging between here until we get the ability to smash through either the high or the low to show an intent and weakness either to the downside or, of course, continuations to the upside. But most logically speaking, or kind of focusing primarily on what price is realistically looking to do, I see longer term shorts in play with price kind of coming towards this latter part of this kind of extremity of this range here. So kind of moving down into the daily time frame, I did have potential short sitting in and around here from the 1 hour time frame, which we'll go into shortly. But if we look at overall price action, what are we doing? We're making lower highs and lower lows, and price is very correctively moving ever so close to that 8,400 level. Like I said, I do expect some form of reaction from this area, but ultimately it's going to be a decent swing. However, it's not going to be the one that ideally I want to be kind of swinging for the fences and taking out a significant amount of R. I do think there will be some form of reaction, but we have to kind of factor in where we are in the market. Overall, based on expectation and order flow, what are we looking for? We're looking for price to move down into that discount area before we look at the demand zones for longs, and vice versa for shorts. We're looking for supply side liquidity to be getting into the market. We'll then of course be looking for shorts accordingly up in and around that premium area of the P&D fib. So price continuously makes lower lows. We've had this huge leg of imbalance with a nice sentiment of liquidity sitting up at the top here. More so, we could refine it to that wick creating liquidity. But if we move down into the 4 hour, just to kind of get a little bit more, we know the structure, right? We're contained inside a weekly range. Price on daily time frame is showing some weakness. The 4 hour really starts to kind of give us some color. We're seeing continuously lower highs and lower lows being printed into the market. We pushed down, we created that arcing formation. We swept the liquidity above this wick here, kind of mitigating the EQ of this range, then started to push to the downside. 4 hour, we have some liquidity sitting up inside this wick. We have a significant amount of imbalance left within these two candles here. But if we kind of move down into the 1 hour, let's just show you what I was looking at coming into the week. We had this range here. She broke to the downside, creating a nice sub-breaker structure. We swept all of the liquidity from these equal lows that were here. We kind of moved back in to sweep and kind of correct all of that imbalance, making price efficient again. We've pulled back in, tapped into the EQ of the move. We've pushed off, then tapped back in to fill and mitigate the remaining liquidity sitting in and around that area of interest from a supply zone. And now we've started to push down. So I would have actually taken quite a lot off of this trade. I'm not going to go into the 1 minute, but realistically we know there was a trade there, which I can go into actually just to show you. But let's just go back out. Just off of that, realistically I know I'd been looking for a minimum of a 3 pip stop. There was a 15R trade sitting inside that. If you do trade full 1% risk, then yeah, 15.5% on the cards. If not, 7.75, and if not, 3.8 or whatever it could be. So liquidity was really nice, and this is the exact kind of setup I was looking for heading into the week. Unfortunately, as I touched upon, I didn't take this trade nor the cable trade that I was looking at because my head's been in the back end, and from a psyche standpoint, it's very difficult to manage and oversee a community of this kind of scale, especially when we've just done a huge migration, and trade with a balanced, efficient, level-headed mindset. So I decided, realistically, I'll take a hit on my trading for March and the next kind of couple of weeks in April while I get it all resolved. But I will potentially be looking at trading London session and maybe New York session only, maybe next week and onwards. So let's dive down into the 5 minute time frame just to see if we can actually see the entry on this. So we saw price push down, broke structure to the left, we came back in, and as I'm looking for plays in this, I would realistically be looking for a double boss confirmation entry as price started to tap in. So there's got to be something on the lower time frame inside this wick, but we'll stay on the 5 minute just for now. Then we come back to, we had a breaker structure, successful retrace. Another breaker structure. So the entry was in and around here, which you could have potentially taken a decent amount of R out of that. Let's have a quick look. Take the EQ of that. 3 pip stop. Okay, so you would have been stopped out of this with a potential R on the table of just under 7. Nice range, initiation, mitigation. Okay, nice. Let's dive down into the 1 minute, because that's realistically where I'm always executing from, or the 30 seconds. So I just want to see if the 1 minute's any clearer, just to see if we would have actually got a nice trade on this. Nothing of any real kind of clarity. There is the potential, obviously, if we were to look at the range play and look at the mitigation of that, the initiation to the downside, then that, realistically, if we were to put, you know, a 3 pip stop on that, come in nicely. The potential to these equal lows just under 9R. But like I said, I didn't take these trades. I've not been able to really kind of focus on the market. There's got to be an entry in and around here somewhere. I just can't see it at the moment. But overall, I did see other people take that Euro Sterling short. So congratulations for those of you who did take that short. But yeah, really, really nice play. Euro Sterling, potential for a 5 minimum R sitting on the cards there. So just kind of coming back out to what we're expecting for the next kind of trading week at least. And this was based on one of the reasons why we were looking for. So missed trades, decent supply zone. We had a range. We had the mitigation of EQ on an hourly time frame. We also had a boss to the downside. And as you can see, when price really started to kind of create that liquidity and build the narrative on the lower time frame, we did have a few potential entries that we spotted, but there wasn't anything I could see very quickly. Without potentially increasing my stop. Now, I'm not against that. A lot of people say that a stop above 5 to 10 pips is conservative, but at the end of the day, it needs to be relative to you. Would you rather make 5 to 10% per calendar month with slightly wider stops, or would you rather have the opportunity to do a 2 pip stop and swing for 20, 30, 40, 50 R a month? It's entirely up to you. There's no right or wrong answer. It's got to fit your overall goals, your overall narrative, your overall story, and what you're looking to build too. Remember, when you start playing with larger notionals, you know, even 4 or 5% on £1 million is life-changing on a monthly basis, okay? Even if you're to do that on an annual basis, it's realistically a lot more than the annual and average salary of the UK and Europe. I think Europe's like 20 to 25,000 euros per annum. UK used to be 35 to 40,000 per annum. So if you were to do, you know, 5% in a year on £1 million, pretty easy, and you've just made an annual salary basically for doing a couple of trades. So yeah, so what's logical for Euro Sterling going ahead? I do see continued downside momentum. I'm expecting a form of pullback to kind of mitigate the liquidity and the EQ of this and fill in all of this imbalance to the upside that's left. However, that could be taken at a later date. I do see price continuing down into this area here, which you can see. The logic is for price to gravitate and target this demand zone. When price is inside that, we're not necessarily looking to execute immediately. We ideally want to refine that and look at realistically where the extremity of this move is. You know, you've got some nice areas of interest here, some nice demand with some imbalance that's yet, you know, it's been mitigated on 50% of that level. We've got this range here that we could look at. So there's a lot of potential to actually get down here. And when we get down here, we'll look to build that story and narrative for potential longs to the upside. Again, bear in mind, when we do move back out to the weekly time frame, we're in the premium of this larger contained range. So you just need to factor that in, because realistically we could be heading all the way down towards, well, underneath that 70 handle, which is not going to happen overnight. It's going to take months for that to kind of come to fruition. But we want to be on the right side of the market, and the way we trade, we have the ability to be unbiased. We can trade where the liquidity is resting, and we can of course wait for the best and highest probable setups. So without kind of dragging on too much, let's move on to the next pair for the Thursday's commentary. Focusing on the daily time frame, we want to be realistically looking for longs in and around the discount of this premium and discount fib. Now, if we were kind of just zooming in on the daily time frame a little bit, a smidge, we can see that we've got this nice demand zone sitting down around that 71.5 handle. So spot 7150, give or take a few pips and ticks on the upside. We also have this nice kind of range that we're looking at, where we have the EQ of the range in and around that kind of spot 7116 and 4. And it is within, it's at the extremity of this higher move to the upside. Overall, this is where that move originated from for that first break of structure, with these sub breaks of structure to the downside as well. And we've pushed to the upside, creating higher highs based on expectational order flow and overall market structure. Now, a couple of weeks ago, I think maybe even last week, I was looking at longs in and around this area as well. We had a really nice reaction to this area after sweeping this kind of trendline liquidity, but we did drop the additional kind of equal lows here, which can be viewed as two things. Are we looking to sweep that liquidity? So are we looking to sweep that liquidity? Then we'd be looking for an initial reaction, kind of back to mitigate that kind of level, and then be pushing back up to the upside. Or alternatively, is this a cause for lower prices, where we start to see the market continuously moving down, making lower highs and lower lows to come back into that demand zone that we were just talking about? Realistically, I am still going to be looking for longs in and around this area if I get the right setup. However, it's only going to be considered as a valid trade opportunity. We are still long overall, but you can see, like, as we move down into the lower time frame, we're starting to make lower highs and lower lows. Thus, realistically, we're starting to obviously move to the downside. So the logical kind of factor here is that we're going to be moving below the EQ of this level. Another thing to kind of factor as well, if you are just looking for kind of those intraday plays and those kind of intra-swing plays, then we are inside that discount leg for a potential move to the upside. This is a swing low. We've got the swing low here, swing high, swing low, swing high. So you would be looking to kind of take and trade off of this range. So there's nothing wrong at all with potentially trying to get in a trade here that is going to be for expectations to make a new high. But just be mindful of where we are in the grand scheme of the overall bullish leg. There were calls years ago that we're going to start coming down to this 40 handle, as the Australian Bank obviously wanted to kind of really reduce the strength of the Australian dollar to increase general productivity of the economy. As you know, they're a commodity-based industry. They thrive off of exports. So for them, a weaker Aussie dollar means that more countries that are within their trade agreements are going to be looking to acquire and purchase their agricultural and other commodities that they sell. So a weaker dollar creates more economic activity and will thus increase potentially GDP per capita, etc., etc., etc. So let's not, let's take that with a pinch of salt in terms of prices coming down to that spot 40 handle. Let's look for longs as price kind of develops, but ultimately just be mindful that we could actually be looking to target this nice demand zone down here. So if we do get that initial reaction, remember just to make sure that you cover any long position, to mitigate your risk as much as possible. Never trade without a stop. We've never ever kind of recommended that or suggested that. But let's kind of move down into the 4-hour time frame and see what price is doing as we kind of delve down. So we had this push to the upside, no real breaks of structure. We took out a substructure here and here, and then we kind of created that calls for lower prices with that ascending trendline liquidity, which has now been taken. Price then moved back in to kind of take out the liquidity inside this wick, which we'll get into shortly. So it mitigated that. It now has the remit for lower prices. First kind of real, without taking into consideration this wick, you've got this kind of buy set up here, which is that nice demand zone. Price did kind of start pushing down. We've got that kind of rejection so far that you can see, which does show that there's some sensitivity in price as we approach this demand zone. Yes, we are in the discount of the leg from this swing low here to this swing high just up above here. So it is logical that we do potentially look for longs. However, just be mindful again, and apologies, I use that word a bit too much today. We've got huge bearish momentum and intent to the downside. We created this calls, we created this kind of corrective price action to excel prices higher, but all it's done is pretty much fill and mitigate the imbalance that was created to the latter quarter or latter part of this leg. We do still have some imbalance still resting up here, but the way it's moved down, that kind of momentum really wants me to get a little bit more of a better understanding on how price now develops out, the narrative behind price, because to me that looks like price is going to want to be seeking lower prices. Thus, I probably want to be looking for shorts. Now, if we look at kind of structural liquidity and logic, we had that move to the downside. We didn't break that structural low. We had a successful retrace mitigating the liquidity that was here. Then we had a push to the downside. So in theory, just based on this kind of play here, we could start beginning to look for shorts. But remember, overall, we're in a bullish trend. We have this head and shoulders pattern, which typically and statistically, the head and shoulders pattern is the most failed chart pattern in the market. If we were just to look at kind of a traditional head and shoulders, you'd get the kind of right shoulder in better construct, and we're expecting price to break the neckline off the lows, retrace back into that, and then continue to the downside. Now, in theory, absolutely gorgeous, and yeah, it can happen and it does happen, and we see these head and shoulders, both inverted and normal, play out all of the time. However, what they tend to do is break structure to the downside, take liquidity from these lows, which that was the calls for lower prices initially. We then induce sellers into the market, both those initial breakout traders and the breakout retest and continuation traders. But rather than continue short, what we tend to do is then move to the upside. And you see it time and time again. And there's a graphic that I will finish off shortly for you that will give you kind of different retail or different chart patterns on a TA perspective and show you statistically how they actually play out rather than how they should play out based on traditional understandings and educational guides around what, for example, a head and shoulders pattern would do, or other patterns for that matter. So, we do have this kind of obscured head and shoulders pattern that's forming, and yet we are kind of looking for lower prices. We do also have this kind of bear flag formation. So again, based on traditional TA, we'd be looking for price to and then go lower. And again, that's traditional TA. If we actually look at kind of how supply and demand fundamentals work, we usually get something like this, where we'll get that sweep of liquidity to the lows. We'll take out all of that liquidity to the left. We'll then induce sellers into the market, and then we'll push back up to the upside and look for higher highs. So for me at the moment, what am I looking for? Let's move down into the 60-minute time frame. I want to see what price does as we move into this demand zone here. We've got some imbalance that's been mitigated. We can see that. We've then pushed to the upside. We've then tapped into that liquidity and that area of interest in that supply side zone, where we've of course reacted from the EQ of that level and pushed to the downside. We haven't broken the lows of these legs yet. We're trying. You can see there's intent, and we're just wicking them. So for me, we're going to get that kind of corrective continuation to the downside. And I will be looking for longs as price enters into this demand zone. However, I am just mindful that, one, we're at the extremity of this move. The momentum and price action play to the downside is quite aggressive. Thus, the intent is looking for lower prices. We do have the liquidity sitting down here as well. So I do expect us to at least grab or sweep that liquidity before moving to the upside. Which again, this could be a cause for lower prices, which means that we are going to start gravitating back down towards the demand zone, towards that kind of spot 71 handle. So around the spot 72 big round number and below is where, over the longer term, maybe towards Q3, Q4 this year, that's where we could see the Aussie kind of pushing into. But overall, I'm going to be looking for longs when price gets into here. If it fails, then I'll be looking for continuations to the downside, so shorts, and I'll be looking to get long as price enters underneath that big round number of the spot 7200 handle.